Hello friends, welcome back to my channel. So today's topic is about another undervalued banking stock. It's called Equitas Small Finance Bank. So it has declared quarterly result few days back. The result is not up to the mark, but however, considering its book value of 54, so this is undervalued. I think the current price is 57. If you say it is almost trading at 1.05 the book value. So for me, this is undervalued. So I'm going to accumulate from next week onwards. Uh, but of course, I'm not a SEBI registered financial advisor. Please, do your own study before buying or selling. This is just for educational purpose. So and also, each individual's patience level will be different. I'm actually kind of a investor who is having more patience, and I'm also kind of a concentrated investor. I invest more in few companies, kind of investor. So let's quickly walk through the different details of this bank. So this bank exists actually in 18 states, as you can see here, and it has got almost like 1042 banking outlets. You cannot call it as a branch. It is smaller because it's a small finance bank. So they will also have different outlets, specifically for giving home loans and all those branches. So its loan book is actually almost like 39,000 crores. Just to compare, other banks, for example, HDFC Bank is 25 lakh crores, SBI is also more than 25 lakh crores loan book they've got. If you come to Kotak Mahindra Bank, it's almost like 5 lakhs, and similarly IDFC First Bank, Federal Bank and all got a loan book of for 2.5 lakh crores, just to give it a comparison. So this bank is a small bank. That's why it's also called, its loan book is less. But however, I think they are also actually asking RBI to give the universal bank license. But however, I think currently only Small Finance Bank has got this license from RBI, but others are still in a applying mode. Nothing has been concretely approved as of now, but they are actually in the process of getting the approval from RBI. So what they do, as you can see here, small business loans they're giving, actually small companies and all, 44% vehicle finance loan, MFI microfinance industry. I think this is where every banks had a lot of pain, those who are lending to this microfinance industry, including IDFC First Bank, Bandhan Bank, RBL Bank, of course also Equitas Bank. But that pain is almost kind of over. Last 4 quarters, this bank also booked very bad result because of that microfinance issue. Now they are also actually now learnt a lesson. Now they are saying they're going to have a loan book of only less than 10%. This one they will keep 8 to 10% only. Since it will also impact the margin. Usually, if you see, I think in one of the slide you can also go through the presentation. In that they've given that actually the almost like yield of the microfinance industry is almost like 24% for the bank. So if they don't yield to this microfinance bank, then they will lose in two things. One is the higher margin they will lose, and second thing, there is also one RBI rule. Actually, they have to lend it to the low income group people. I think if they don't do that, then they have to buy some bonds from RBI, I think, which is not so good. That's why usually everybody has to lend. Apart from that, they can also insure with the insurance government. There is an organization where they can insure as well. So currently I think 23% of this loan book of Equitas is insured. So as I said, I think now onward they will also start lending back, because most of the things either written off or the provision has been given actually. So other than that, if you see housing finance, they are also doing 13%. The medium scale industry, they are doing 5%, and the NBFC related stuff they are doing 2%. Yeah, I don't want to go through all of these details. So if you can see here, yield on gross advances, it is 15.73, which is reduced because of the lending has been reduced. And CASA also, it's 31%. It's not that much great, but however, uh, it's okay kind of thing. Cost of funds 7.35. So this was also a year. This has been reduced a little bit. CASA is little bit improved, and PAT means profit after tax is 24 crores. I think last year it was 13 crores, and last quarter it was minus 244. That means they declared a loss of 244 crores. I think compared to that, this quarter is a little bit better. But now onwards, I think market is always forward looking. So currently, the maybe it is not so good result. But if you have patience to hold for 1 year, I think this is going to be good bet, because management already said that they're going to book a good profit from now onwards. I think this is the one of the good news you have to look. And here ROI is also actually very bad, but in the slide down somewhere, so they've already said that they're going to. So yield, I think this is what I was talking about earlier. So if you see, the yield was microfinance industry, it was almost like 24, this top one. So now this has been reduced to 22%. Similarly, on the non-MFI loan book also, they've got a gross margin of, had a gross margin of 16.6 or something. This is also reduced. I think because of this, the profitability has reduced. I think this is also NIM, you don't want to go through all the details. So important thing is here, so they have mentioned that I think 1% ROI they will achieve by quarter financial year 26. So if they're going to achieve 1% means definitely I think next 2 quarters results will be good. So anyway, these assets and all I already told you. Grass advances grew by 4% and 9%. And liabilities also. So I don't think so I need to, again, since you are able to read it, I think you can read it yourself. I don't want to go through the details again. What you can also interested is daily average cost of the fund. It is little bit reducing. Net interest margin is also reduced. You can say one time they were almost like 7.69, now it is reduced to 6.29, as I told you, because of the reduction of the MFI loan. Cost of fund is also less. Provision coverage ratio, I think very important thing for any bank, if you want to look at GNP and NNPA, this is the quality of the loan book what they've got. So this is really good. I think this is almost like stable if you see from last quarter. So this is what you want to you have to look. If you see compared to Bandhan Bank, GNPA is still more than 5%. I think that is also one reason even Bandhan Bank also declared the result yesterday. So if you see the result, I think, if you see the market, I think few days back they have declared, and if you see the price correction on Friday, I think it fell down by 8%, because the book is not so stable. The quality of the book still they've got, NPAs, and NPAs means, those customers who are not paying back the money, if there is a monthly EMI or something, if they're not paying, that will be considered as non-performing assets actually. So GNPA and NNPA is stable. This is also one reason why I'm also looking into this bank. I don't want to get into Bandhan Bank because it fell down by 8%. That is also very attractive. I think it's also at the almost like book value similar to Equitas. But I am seeing opportunity here because the quality of the book is stable, and also management's guided for 1% this by financial year quarter 2, means March 2026 result. By then I think they're going to reach 1% ROA, return on assets. And also I think next quarter onwards they're very much confident that they are going to grow the loan book by 20%. This is what the management said. So provision coverage ratio and other things are good. Here they've covered almost like 66%. Yeah, return on equity is very less, because anyway they did not book the they did not book the good profit because of that. So yeah, let's now quickly come back to the share price. So if I come here to screener again, so this is the Equitas Small Finance Bank. The current price is 57, and it fell down by 3.75%. I'm planning to enter, if it comes to 55, I'm going to enter this bank for sure. So market cap is, as I said, this is a small finance bank, 6,500. Price is 57. I think it is almost near to the 52-week low. Book value, I think this is wrong one. As I said, I've checked the presentation. I think it is almost like 54. If you see 54 and 57, you need to grab it actually. If the quality of the book is stable, if the NNPA and GNPA are predictable, if it's going to be stable, and if any bank is available at less than book value or equal to book value. There could be short term pain, but however I think it's going to improve. If you see now, IDFC First Bank was also similar levels earlier. Each book value is also 54. Now it is almost trading like 80 plus. Similarly, also RBL Bank, one time it was trading at 125, its book value was 250. So 150 or something, and its book value is 250. So that is also got a re-rating now. Same way, I think this will also get re-rating in couple of quarters. This is my gut feeling and also analysis, since I'm already analyzing bank stocks. Yeah, dividend yield is nil because they did not give any dividend last year because of this MFI pain. Face value is 10 as well. So yeah, we don't need to go through individually everything. Price to book value, this is wrong. At least 1.05 now. I think this you need to. It's looking very attractive to me since I'm a value investor. So quarterly result, the revenue is stable because almost like 1,600 only. So here, this is the pain actually where I was talking about. So the profit was less. I think, as management said, they will also start, booking the profit uh, from next quarter onwards. And next is, on a yearly level also. Anyway, it's minus last this financial year. You can see here sales growth is there, 19%, and 3 years 22%. So anyway, profitability has to be fixed, as the management said that because of the MFI pain they were struggling from couple of quarters. So it should pick up now onwards. Just let's quickly check the shareholding pattern. So yeah, I think DIA has a little bit increased the holding in the September quarter. So the new entries, SBI ALSS tax saver fund, they've entered. They almost grabbed like 7.43% of the whole equity. And the HDFC Small Bank, I think HDFC Small Cap Fund, it has reduced a little bit. I think Franklin, okay, maybe they have reclassified it from small cap. Okay, that's on name change only. Otherwise, SBI Contra Fund, it is fully exited, or maybe it's a name change. No, I don't know. It looks like they're fully exited. And here Mire, this they have also increased little bit from 4.59 to 4.93. Nippon is same. I think some of them are also exited. So Canara Robeco Mutual Fund, I think these have they increased from 2.46 to 2.87. So Sundaram Finance Bank, they've reduced it, and also so many companies have also reduced it. So that's what I mean. It's kind of a mixed. You cannot judge by that, but overall, if you see, there are some new entry guys, and also there are some exits as well. But however, I think overall, if you see, uh, the mutual fund houses have actually increased the holding. So another good thing about here is, so Mr. Ashish Dhawan, so he is actually kind of a very good investor, as you can see his holdings. So even in case of IDFC First Bank, when the price fell to 54, that time also actually he accumulated the stock. So I think these are all his holdings. So somewhere Manappuram Finance is holding, and so he's also holding IDFC First Bank somewhere, I think I've seen, but anyway, it's not showing here. But anyway, I think big investor, if they're there, and if he has also increased it, you can see here when the price reduced 3.86 to 3.97, he has increased it. This is also one of the good thing. So anyway, since it is a kind of almost like a private bank, as per the RBI rule, I think no promoter can hold more than you know 15% or something. The rule is there. Because of that, I think the promoter, there is no promoter in this. You don't need to get worried about, because HDFC Bank, ICC Bank, all the big banks also do not have any individual promoters. It is with the public or the DIs and FIIs. So that's it. I don't want to spend too much time here. So this is currently almost like at the book value. For me, considering the management, I had also gone through the con call which was done during the quarterly result. So management is quite confident. Maybe next quarter also there will be little bit pain, but however the profitability will be much bigger than this quarter. And next quarter onwards it should do well. I think quarter 4 onwards the profitability should come back, and even the loan book should also grow. from next year onwards 20%. And they also learned a lesson. They are also, management also acknowledge that, and they don't want to grow too much of MFI because it's kind of unsecured loan. Even though there is a good margin, if they're lending at 24%, the cost is are 5.7 or 6%. If you see, almost like 18%, yield is there, margin is there. But there is also pain. They cannot pay. If they're not paying, I think the government also will get involved there. You would have heard that actually so many people have committed suicide in Karnataka and other places where the politicians try to intervene, and it will become really bad situation if the low income group people are not able to pay. So you cannot get the money from them. I think ultimately you need to write off or something.